What's up, everyone? Glad you tuned in. Stop whatever you're doing for the next few minutes because I'm going to unpack something about Kaspa that could seriously change how you think about this project. I promise there's a reveal at the end that every Kaspa holder needs to hear, and if you skip it, you might miss the one fact that flips everything. So don't click away. Listen closely, take notes, and keep your thinking cap on. This video is for educational purposes only. It is not financial advice. Always do your own research before investing in crypto. Kaspa is reportedly preparing to go for an insane throughput record. Think tens of millions of transactions packed into a single day. The chatter around the community says the target is roughly 60 million transactions in 24 hours. That's not a quaint milestone. It's a statement about scale and confidence. And the figure behind much of the noise? Figures like Liberated Potato and longtime OGs of the Kaspa scene, people who've been building and pushing since day one. When community veterans mobilize like this, it's worth paying attention. Here's the angle you need to grasp. Kaspa is already producing headline-worthy numbers while still being off the radar of the biggest exchanges. That's huge. No Binance, no Coinbase, 0 Tier 1 listings, and yet the protocol is making serious waves. Imagine what happens the moment those listings go live and mainstream traders plus institutions begin to flow in. That's the catalyst story, plain and simple. Numbers matter, and on-chain moves can alter the narrative fast. Kaspa tracking sources are flagging heavy action from what they call wallet number 2, a deposit of 48.8 million KAS, roughly $3.9 million at the time of the move, pulled from Gate and Bybit. That's a major accumulation from a single source. Observers also noticed a microtransaction, a 1 KAS test transfer, which some in the community read as an exchange-level test. Could it be Binance or another Tier 1 testing deposit/withdrawals? I'm not saying that's confirmed, but traders who move millions generally act with inside knowledge or strong conviction. Then it gets juicier. Another wallet report indicates wallet number 2 added about $4.3 million more. That kind of repeated buying can vault a whale into the top spot and rewrite the top holder leaderboard overnight. When smart money starts stacking before everyone else catches on, price action can shift dramatically in short order. So, when you see whales piling in like this, what does it do to your psychology? Does it calm you or send chills down your spine? Your answer matters because psychology fuels market moves. Right now, Kaspa's price sits around 8 cents according to recent chatter, and you'll hear some analysts throwing around a $1 target. Is that realistic? Maybe. But the cleaner way to think about it is this. Kaspa has already generated huge interest without top-tier exchange liquidity. That means supply-demand imbalances could be extreme if and when major venues announce listings. The flip side, no listings also keep FOMO contained for now, giving insiders a window to accumulate. That's why many in the community are watching on-chain flows with laser focus. Another data point. Community sentiment metrics dipped below 90% for the first time in weeks. Some retail holders look tired, others are taking profits or simply stepping aside. That decline isn't necessarily bad. It's often part of a healthy consolidation phase. Markets that only skyrocket without digestion create bubble risk. Pullbacks and sentiment cooldowns can be opportunities for disciplined buyers who see the bigger thesis. So when sentiment slides, ask yourself, are you emotionally reacting or are you doing strategic risk management? Now let's zoom out to the macro narrative that really excites some analysts. The idea that vast sums of wealth will move between generations over the next decade. Numbers being tossed around are eye-popping, like $72 trillion of intergenerational transfer. Whether that exact figure is nailed down or not, the core point stands. The global economy is on the cusp of huge capital flows. If trillions move, the rails that enable that transfer, the payment networks, the settlement systems, need to be fast, cheap, and reliable. Bitcoin occupies the digital gold role and has cemented that status. But speed has never been its strong suit. Confirmations can stretch, fees spike during congestion, and you wouldn't want to use it for instant retail payments. That's why proponents of Kaspa argue the protocol could become the settlement layer for real-world, high-throughput transfers. If the world needs a network that settles payments in seconds and can soak up massive transaction volumes, that's where Kaspa's tech narrative becomes interesting. Here's the technical point that underpins the entire case. Kaspa doesn't try to be a single sequential chain of blocks like Bitcoin. Instead, it uses a blockDAG structure and relies on a ghost-like protocol to validate and order many blocks running in parallel. The practical outcome: Kaspa processes multiple blocks per second. Analysts talk about around 10 blocks per second, and transactions appear nearly instantly with settlement on the order of about 10 seconds. That's a far cry from waiting minutes for confirmations and paying large fees. The blockDAG architecture is the heart of the narrative. Think of Bitcoin as a single-lane road where every car must wait its turn. Kaspa's DAG is a multi-lane expressway where many cars move simultaneously and get guided into safe order. That enables a different class of use cases: near-instant microtransactions, high-volume retail flows, and financial rails that don't melt down under load. Another pillar proponents cite is the project's research and academic backing. The technology ties back to well-known research in the distributed consensus space, and that lends credibility beyond hype cycles. When respected researchers and protocol designers influence architecture, it raises the odds that the design choices are robust and scalable. That matters for institutions and developers looking for technical legitimacy, not just a marketing story. Kaspa's roadmap doesn't just stop at base layer speed. There are plans for smart contract functionality through Layer 2 approaches. Names like Kasplex get mentioned in the community. Layer 2 solutions mean you can keep the main ledger fast and lightweight while enabling DeFi, dApps, and richer financial tooling on secondary layers. That combination, a nimble settlement layer plus extensible L2s, is enticing if you believe that future financial systems will require both speed and programmability. Let's map this to the market metaphors to keep things simple. Bitcoin is digital gold, scarce, secure, and trusted as a long-term store of value. Kaspa, digital silver, built for motion, for everyday transfers, and massive throughput. If Bitcoin stays the bedrock reserve, then a fast medium of exchange network that can settle trillions of dollars of movement without latency becomes extremely valuable in a different way. Do both fit in the same portfolio? For many investors, the answer is yes. They serve different roles. Here's the secret I've been hinting at. This isn't just one isolated driver. It's multiple catalysts aligning: on-chain whale accumulation, impressive throughput benchmarks, and record attempts, a roadmap toward smart contracts, a fair launch narrative that attracts decentralization-focused investors, and the looming macro story around massive wealth transfers. When technical capability, community conviction, and institutional signals converge before major exchange liquidity, you get what traders call a stacked setup. Windows like this don't stay open forever. This is not financial advice. Let's be brutally honest about risk. Even if everything lines up, crypto markets are volatile, subject to sentiment swings, regulatory shifts, and execution risk. Smart money can be wrong. Roadmaps can slip. Exchange listing noise can be just noise. So the correct mental model is to weigh both the upside and the downside and size positions accordingly. If you're thinking of getting involved, consider position sizing, stop rules, and a time horizon that matches your risk tolerance. Do you believe speed and instant settlement will matter more than pure store of value narratives in the next decade? If a giant wave of generational wealth moves, which networks are actually capable of handling it practically? How much conviction do you have in the team, in the research lineage, and in the on-chain signals such as whale accumulation? Are you prepared to hold through high volatility, or would you prefer to trade around catalysts? Here's the payoff. The hot take I've been building toward is simple but powerful. We are in a narrow pre-liquidity window. Before Tier 1 exchanges light up KS trading with full retail and institutional order flow, the market structure is thin enough that concentrated buying and credible throughput demonstrations can dramatically reprice perception. That means those who are aware and prepared could be positioned before liquidity floods in. The whales aren't just accumulating for posterity. They're stacking while the market still lacks the depth to absorb institutional-sized orders easily. Combine that with a record attempt, millions of transactions in a day, and the tech narrative, and you have the makings of a dramatic narrative shift when listings or big announcements finally drop. So what's your move? Are you accumulating now while the window is open, holding through what could be an identity-shifting series of catalysts? Or sitting on the sidelines until the headlines confirm what the on-chain tells you? There's no one-size-fits-all answer, but armed with the context I just gave you, whale moves, potential exchange tests, the 60 million TX ambition, the speed versus gold use case framing, and that stacked catalyst secret, you can make a more intentional decision. To sum up in plain terms, Kaspa is generating real technical and on-chain activity without the support of Tier 1 exchange listings. Whale wallets are accumulating heavily, the community is seeing mixed sentiment, which can be healthy, and the protocol's blockDAG architecture promises speed and scalability that could be relevant during massive capital movement eras. Combine these signals and you get a short, potentially lucrative window before mainstream liquidity arrives. The ultimate secret is that this is not a single event, but several catalysts converging, and windows like this close fast. If you're in Kaspa, stay sharp. Track the on-chain flows and decide now how you'll act when the next big announcement hits. If you want, I can craft a checklist for monitoring the exact on-chain metrics, exchange listing signals, and position sizing rules so you're ready to react like a pro. Say the word and I'll lay it out. Thanks for watching. Like the video, drop your thoughts in the comments, and hit subscribe if you want more real-time updates, moves, market trends, and hidden gems.